hedge funds combine to create a $20 billion fund to take Tesla out. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. Wanted to thank our Patreon supporters. If you enjoy our show, please take time to like and subscribe. So today's show is focused on, or directly on, the fact that there's an article in Yahoo yesterday that was referencing a Reuters article discussing the fact that there had been a $20 billion short position that had been developed specifically for Tesla. So I was kind of shocked when I read that for a whole bunch of reasons. The first is the fact that, for example, there's a guy named Jim Chanos, and Jim has been shorting Tesla's stock or betting against it since it was $300 or $400 a share. And they asked if he was still doing so, and he said absolutely, continuing to short it because he thinks it's going out of business or going down. And so I was kind of stunned, because what's been happening is that since about $500 a share, the short interest in Tesla has continued to decline to the point where the last time I checked, I guess 2 weeks ago, was about 14%, whereas at its apex last year is probably at about 25 or 30% of the shares outstanding. So I actually read this short position info, supposedly the biggest short position ever accumulated against Tesla, and I assumed it was a misprint and wondered what was going on. And so there's a bunch of reasons why people tend not to do what was just done with Tesla. Number one, there's something called the SEC. If in fact you guys are trying to manipulate the stock, you could end up with a lot more investigations and a lot of fines and et cetera. Number two is something that is a good and a bad, is the idea of, let's say you have a whole bunch of sharks and you throw chum in the water. What that results in is that it brings in a whole bunch of other sharks to feed on that situation. So it could be a good thing, because if you have a shorted position, it's telling other shorts what you guys plan to do. And so you now have sort of more people with large amount of dollars and expertise to manipulate and potentially sabotage the stock. On the flip side of this is crazy things can happen when big sharks get into each other. So one, there can be a primary target of what they're trying to manipulate, i.e. Tesla, but other problems can come up. For example, the sharks will start attacking each other, where you have sort of a giant shark think that some of the smaller sharks that help bring them in will decide to feed on the smaller shark instead of the targeted, let's say, wounded animal that might be in the water that's spewing blood. So one example of this I wanted to bring up is something called long-term capital management. One of the most famous attacks ever against a firm was a company called LTCM, Long-Term Capital Management. It combined a Nobel laureate who helped design options trading process that we use currently, as well as a guy named John Merriweather, one of the most legendary traders on Wall Street, and other senior professionals. They were able to pull down one of the largest amounts of capital to do a hedge fund, and then they proceeded to sort of deploy that capital with huge amounts of leverage. There were other firms that got an understanding what their positions were, and in essence, long-term capital is trying to do their trades consistent with the PhD caliber research they had done to put it together. But instead of competing sharks trying to identify and roll with the trades that they're doing, they made a point of attacking long-term capital management instead, which resulted in almost a collapse of the entire market, where the Treasury Secretary and Fed had to come in to prevent a total collapse. So in essence, things like this happen, and they do happen. There's a lot of smart people everywhere within the financial system that leverage that knowledge in order to execute some phenomenal trading and therefore make phenomenal amounts of money in the process. So that's one thought that comes to mind. Another is that there's a famous sort of trade or activity that came up, which is Goldman Sachs got sued. There's a company called Overstock.com, and they were either in it or teetering on bankruptcy during the 2008 meltdown. And instead of the stock price falling, the stock price was rising during the worst of that financial crisis. And so the question was, why did that occur? The answer is that the folks at Goldman Sachs had provided $3 billion to a hedge fund. And as the hedge fund got into its trade, it was shorting Overstock stock, and Goldman knew what the covenants were that that company was under. So by elevating the stock price, the hedge fund accumulated large numbers of losses because they were shorting. And the only reason we know about that one is that after the hedge fund went bankrupt, Goldman cashed them out, and they sued Goldman. And I didn't see what the resolution was, but it illustrated the fact that even if a Goldman helps you open up your hedge fund, they could end up being a shark that's trying to take you out. So we're sort of illustrating in general types of things that can and do occur on Wall Street. And obviously the reason is to make money, and it works. That's why it's done. So I'm bringing these up because it's clear that right now, if you look at Tesla's stock price movement over the last couple of days, there's been a lot of volatility, way ups and way downs, same day. And so I think that the efforts of that $20 billion fund to some extent are working, because I have to say I'm on edge in terms of my trading. And I would think that there are a lot of individuals who are regular consumers that might buy the stock and hold it, that it's disconcerting to 1 minute see your stock at 1,400, the next minute seeing it at 1,311. And if you multiply out on an expensive stock, that can be a large amount of dollars that people have lost, even if it's in the short term, and then in some cases overnight. So it encourages sort of the less experienced to bail, while the more experienced sort of stay in and make money riding the curves that we might see. So what I'm expecting kind of after hearing about this short is that we end up over the next few days heading into earnings from Tesla, see extreme volatility driven by the fact that those giant sharks that might have been focusing other companies will start zeroing in on Tesla, knowing that there are other sharks looking to take a bite out of the company or the company's stock price in the process. You know, the other question is, like, why would somebody do that? And given the nature of risk of what could occur, and for me, it feels a little bit like desperation. You know, it clearly hasn't been done before, but the fact of the matter is that once Tesla qualifies and enters the S&P, even before, as long as it qualifies, even before it enters, you end up with a situation where large numbers of firms are forced to enter acquisition of the stock. And with those large pools of money, the manipulative ability of the hedge funds to control Tesla stock price up, down, wherever they want, declines because of the size of the holders that are out there and the temperament of those holders relative to their willingness to allow people to short those shares and other things. And so the environment of Tesla will change dramatically after earnings, I believe, for the reason I just described. So as a result, I think there is a little bit of desperation there. And as I've shared a couple of times over the last few weeks, because there are a number of firms that will be completely destroyed and go bankrupt by the time Tesla brings in earnings that allow them to meet the S&P, I actually kind of feel like this is a last-ditch effort by some very successful hedge funders who are going to lose a lot of money to sort of leverage the power of themselves and other firms to actually move Tesla's stock price for them, hopefully in the downside, so they can unwind their positions at lower prices. Obviously, it is risky because there are certain firms that will that have equal amount of dollars and can move the stock as well. And so I think it's going to be an interesting feeding frenzy. So I would encourage you, if you're trading or if you're buying the stock, expect some dips of 50 to 100, maybe even 150 points on the stock. And those dips, I think, could be very lucrative. I suppose the other thing to really consider is that you may want to consider hedging, i.e. some puts heading into earnings, because if the earnings are good, you won't have to worry about your stock price rise nicely. If the earnings are bad and don't meet the S&P requirements, we could see a dramatic sell-off of Tesla in the $200 to $300 range in a day or two. And so it'd be nice for you to protect what you've already earned and not get slammed in the process. So I also have to say that I was thinking about, there's a comment made by Mark Fields, ex-Ford CEO, where he said, be careful what you say to people on the way up, because they may treat you unkindly on the way down. So Mr. Musk introduced his short shorts, and he's been sending it out to some of the hedge fund managers who've lost a lot of money, as well as selling it online. And the interesting thing about that is that one of the challenges out there is that you might not like the shorts at all, but many of them have friends, many of them worked at the same firms, many of them sort of cohabitate and share ideas about how and what they're going to be doing trading-wise. And so all of this lends itself to the potential for these folks to operate as a group when they're executing certain activities, including shorting stocks. So it feels to me like this is really an invitation for other sharks to note what they're doing and see if they can get in on the feeding frenzy to cause dramatic shifts in Tesla stock price. And I would think for them, hopefully down, because nothing else seems to have worked in terms of slowing Tesla in this process. So we will keep you posted on this. It is Friday, the 10th of July, 2020. Is it a pin day today is often a question asked of me. The answer is that there are a lot more puts than calls out there right now. So the suggestion from my assistant is that we're actually facing kind of an updraft in the stock a little bit here, potentially today. And the reason is that if you look at the number of puts below 1,400, there's a lot of people holding them. And so therefore, by just getting the stock over 1,400 today, maybe even 1,405 or 1,410, you have a situation where the market makers can cause a number of put holders to end up with no money. So we'll see if this occurs, and keep an eye out and look forward to your comments on this. This is Greg for Teslafaninsight. Thanks once again for joining us. We also look forward to any and all comments that you might have. Also want to encourage you to do 25 leg lifts a day. Also want to encourage you to consider a 5-2 or other diet that'll help with mental faculties as you age. Wanted to mention a 30 SPF or greater if you're going to be outdoors in the sunlight of the summer. And once or twice a week weightlifting could also improve bone density. Wanted to again thank you. Tschüss, German, au revoir, French, lehitrot, Hebrew, choda hafez, Farsi, hey do, Swedish, Zdravstvuyte, hello in Russian, ni hao ma, hello in Chinese. Thanks once again for joining us. Have a great day. Bye for now. We look forward to your comments.